begin with the not so good news. After many quarters of strong growth in financial results, the effects of the semiconductor chip shortage have caught up with us in this quarter. And we've had a quarter with flat revenue growth and a decline in EBITDA. And although there is a 4% growth in reported net profit, it includes a one-time tax benefit. Now, despite the low sales and headwinds on material prices, freight costs, and all other input costs, we managed to maintain our best-in-class margins at the same level as last quarter. And I'm quite proud of our team, which has done a stellar job of managing costs and proving that while they're good in good times, they are quite exceptional in tough times. And the one note of optimism that I would like to add here would be that in our opinion, December 2021 was the lowest point of the chip crisis, and from here on we should start seeing gradual improvement every quarter, although full resolution remains a few quarters away. The massive silver lining in this environment was our battery electric vehicle revenue growth, where we more than doubled our revenue. And this also shows how much the conventional business has fallen this quarter. To demonstrate that point further, if we were to look at the data of US and Europe, our two largest markets, sales are down 22% year on year. In fact, the last quarter was the second worst quarter of auto sales in US and Europe after the global financial crisis of 2008. So yes, we've had a flat performance. However, we hope that it is seen in the context of our industry and its situation. And another data point worth noting here is that even for the 9-month period of this fiscal, these markets are down by 1%. While in quite stark contrast to that, we managed to achieve 54% growth in revenue, 65% growth in net profit in the same 9-month period. And this has happened due to our consistent business development efforts with our customers and improving our share of wallet and global market shares, which have reached 6.3% for differential gears and 4.6% for starter motors at the end of calendar year 2021, which is a solid improvement over our position at the end of calendar year 2020. Now for the better news, the update on our strategic priorities, beginning with EV. So our BEV revenue share has increased to 23% on the 9-month period. It was 14% in FY21. In absolute terms, it has grown by 168% to reach over 355 crore in the first 9 months of this fiscal. And it gives me great joy to report that we've added 4 new EV programs from 3 new EV customers just in this quarter alone. And these are all large wins. The new wins are a differential assembly program from an existing customer for Europe, an e-axle program for an Indian 3-wheeler new customer, a motor and controller program from another new Indian 3-wheeler customer, and a very unique and new product program for a new customer for the European market, which I'll elaborate upon a little later. With this, we reach 24 electric vehicle programs across 14 unique customers. Now, we've made this chart to help provide more transparency and clarity on the penetration of our electric vehicle programs. And as you can see, our EV story is quite global, quite deep, and with 17 programs not yet in serial production, quite indicative of strong future growth. And now let us share with you about the new order win for an entirely new product for us. And although this new product has nothing to do with propulsion, since the end vehicle is electrified, we've included it as an EV program. So what is happening is that with the advent of electrification and autonomous vehicles, there are many new, interesting and challenging opportunities. One of them is around smarter suspension. So the product we are making is the integrated motor controller module, or IMCM, which goes into something called a predictive active suspension system. Now, we don't make the whole system, we just make the motor controller plus software module of it. Now, let's see a short video that demonstrates this product, because it's hard to explain in a short time what the product does. So, Prateek, if you could just play the video. Right. So this is a futuristic suspension system which has our integrated motor controller module, which senses every bump and speed breaker and then independently responds to all external disturbances. In simplistic terms, the motor generates an exact counteracting force to mitigate the impact of uneven road surfaces so that the vehicle glides over all kinds of roads. This capability extends further to anticipating oncoming potholes or road disturbances through the geospatial software and react with lightning speed. Now, whether the passenger is in the front seat or rear seat, the ride becomes much smoother with complete avoidance of motion sickness. In fact, it's several orders of magnitude smoother than a vehicle without a predictive active suspension. Now, of course, there are three reasons why this new order win is so important for us. First, this validates our faith in the power of innovation. This new product has only been successful due to our extensive R&D on belt starter generator, or BSG, especially the thermal management and the software modules. And this also proves our hypothesis that owning and controlling our primary technologies gives us the ability to keep iterating and innovating and finding multiple different applications and products for the same technology. Second point is that with almost 2 million lines of code per IMCM, it also validates our belief that the ability to integrate hardware and software will keep getting more importance as vehicles and the systems inside them get increasingly smarter and more autonomous. And thirdly, of course, commercially, this is quite significant as it adds a brand new revenue stream for us as a company. And with this first single order alone, this win alone adds up to 400 crores revenue per year. And it also means that our order book is shaping up in such a way that in financial year 26, we will be generating more revenue from traction motors and active suspension motors than we did from starter motors in FY21, which is a complete flip from what this business used to be 3 years ago. Which, of course, brings me to our net order book. On the back of these 4 new EV wins and some new non-EV wins, at the end of Q3, we've reached 17.6 thousand crore, or around $2.3 billion versus 13.6 thousand crore last quarter. The EV part of the order book has increased from 58.5% and 79 billion at the end of Q2 to 66.4% and 116 billion at the end of Q3. And this ratio expected to continue increasing. Another thing to point out here is that although we continue to win new orders in the electric two-wheeler and three-wheeler space in India, in value terms, almost 90% of our EV order book is still passenger cars and mostly from outside India. We want to mention this to illustrate that while we are and will continue to be participating and benefiting from the India EV story, we have a much, much larger growth driver in the shape of electrified passenger cars in the global markets. Now coming to diversification, we begin as always with the revenue cut by powertrain. Here increasing BEV share from 1% in FY19 to 23% in the first 9 months. underlines the dominant and secular trend and the reciprocal trend also that our exposure to ICE has been reducing in every period to reach now 19%. Moving to geography, this quarter had fairly disrupted schedules, so has changed the percentages a little bit, but overall the mix remains balanced across all our four major markets, which are North America, Europe, India, and Asia. As I said last time, this mix will keep changing from quarter to quarter, depending on the performances of these four markets, and more critically, our customers' performances in these end markets. We are fairly well diversified to mitigate issues at any one specific end market. However, the dynamic around the virus and the supply chain shortages, which affect everyone, will affect us like any other player in the industry. On products, our revenue share from differential assemblies has grown from 5.6% in FY20 to 26%, which is fairly dramatic increase. In the coming years, we will also add the IMCM product that we just showed to this chart and hopefully keep continuing our journey from a components player to a subsystems and systems player. Finally, coming to vehicle segments where there are three inferences. CV demand, especially in India, is starting to gradually pick up, gradually being the operative word. Off-highway segment has weakened. And thirdly, our efforts on the traction motors and controllers in the electric two-wheeler, three-wheeler space have finally started showing some results, and they have reached a full percentage point for the 9-month period. With that, I'll turn the call over to our group CTO, Mr. Deshmukh, to discuss our approach to technology. Over to you, sir.
Thank you, Vivek. Good evening, ladies and gentlemen. Yet another revolution in personal transportation accompanying the electrification is triggered by connected, automated, and autonomous vehicle technologies. While electrification has been fostered by the concerns about global warming and regulations, automation of mobility is driven by the technology's societal benefits relating to safety, convenience, reliability, and equity. Automation technology that performs at least some aspects of a safety critical control function without direct driver input is not binary, but there is a spectrum of levels of automation. So the Society of Automotive Engineers International, SAE, categorizes automated driving functionality into distinct levels, summarized by the level of driver involvement during operation as depicted in this slide. We all know, it is well known, cruise control, lane positioning have become standard features in many mainstream automobiles. The advent of sensor technology, connectivity, high-speed computing, high-definition mapping, complementary infrastructure development, and regulatory frameworks will transition automation to higher levels in the not too distant future. So as automation moves to higher levels, many systems and subsystems in the vehicle will get smarter and closely. They will need computing intelligence, in situ memory, integrated sensing and actuation functions. This presents many opportunities for suppliers like us who can and will integrate hardware and software to develop the new generation of systems. So our technology roadmap, which is now expanded, as you can see, compared to previous call, addresses both the revolutions taking place in mobility. So it displays our vision of becoming a significant player in electric vehicles and autonomous and connected vehicles. The product roadmap is intended to show our past, present, and future products. So the dark area here shows our legacy or core products, differential gears and starter motors. The blue area shows the products that we have developed in recent years and which we are offering to the customers, which our current products. And the products shown in the white area are currently under development in our R&D centers, our aspiration for the future. So our competence in hardware and software engineering, integration, and thermal management have allowed us to expand our product range into the growing autonomous and connected space, as exemplified by the recently introduced integrated motor control module that Vivek just now showed, which offers comfort and convenience to the occupants of the car. So with that, I will hand it over to Rohit to cover the financial update.
Thank you, Mr. Deshmukh. A very good day to you all. It's my pleasure to share our third quarter and 9 months results with you. Merger of Sona BLW and Comstar India has become effective on 28th January 2022 with 5th July 2019 as the appointed date. The reported standalone financials, therefore, are reflecting the merged accounts of the two entities for the first time, and comparable periods have been restated accordingly. The merger, however, doesn't have any impact on the consolidated financials reported and being presented here. I will start with the YOY comparison for our third quarter results. Our overall revenue grew by 1% to 4.94 billion rupees. Our BEV revenue, however, grew at a robust pace of 108% to 135 crore rupees. Our non-BEV revenue is, however, lower by 15%, mainly due to a decline in the industry sales by 22% in our key markets of US and Europe. Our EBITDA margin at 26.4% is within our historical range. Better product mix had a 2% positive impact on the margin, whereas adverse impact of 5.5% came from increase in the material prices. Out of this 5.5%, 4.2% impact is despite the material price pass-through to the customers because of the arithmetic effect of revenue and cost going up by the same value. Balance 1.3% impact is due to the material price increase, wherein price pass-through was not available to us. Our reported PAT of 864 million rupees is higher by 4% on a year-on-year basis. Higher depreciation, lower interest, and other income put together had an adverse impact of 0.4% on our PAT. In the third quarter, however, we have a one-time tax impact which has increased our reported PAT. Adjusted for this one-time impact, our PAT would be 738 million rupees and PAT margin would be at 14.9%. Earlier in our presentation, Vivek had shown you the graph of Europe plus US sales over the last 13 years or so. As you would have noticed, one of the key takeaways from there is the seasonality effect on the sales from quarter to quarter within the year. In view of this, we feel quarter-on-quarter comparison may not be providing any useful insights, and therefore we have decided to discontinue with it from this quarter in our presentation. So I will straight away jump to the 9-month comparison now on a YOY basis. Our 9-month revenue grew to 15.81 billion rupees, which is higher than the last full year revenue. Our BEV revenue grew by 167% and non-BEV revenue grew by 37%. And this is despite a 1% decline in the industry sales in our key markets of US and Europe over the same time. Our EBITDA grew by 41% to 4.24 billion rupees with a margin at 26.8%. Positive levers for the margin were the product mix at 3.2% and operating leverage at 1.6%. However, there was an adverse impact of 5.7% due to increase in the material prices, out of which 4.3% is despite the material price increase passed through to the customer, and balance 1.4% is due to price pass-through not being available to us. Besides this, we also had a higher forex gain in the comparable period last year, which had an adverse impact of 1.6% on the margin. Our PAT has grown by 65% to 2,569 million rupees, which is also higher than the last full year PAT. Depreciation, interest cost, and other income had a positive impact of 1.3% on the PAT margin. One-time tax impact and reversal of IPO expenses had a further positive impact of another 1.4%. Finally, we move on to the key ratios. Now here we have made some small changes from the last time to ensure a more consistent reporting. For return and turnover ratios in case of P&L items, we have now shifted to last 12-month numbers instead of the annualized numbers which we were using earlier. And for balance sheet items, we have moved to average of opening and closing numbers instead of using only closing numbers, which would vitiate the ratios calculated because it was at a given point of time. Now, value addition to employee cost in our case has improved to 5.6 times compared to the earlier 2 years. And this needs to be appreciated in the inflationary background that we are in, wherein the material costs are going up. Our return on capital employed and return on equity ratios at around 36% demonstrate a continued robust return profile. Our net debt to EBITDA ratio has turned negative as we have paid off the long-term debt from equity proceeds raised earlier in the year. And capex for the year so far has been funded largely through the internal accruals. Lastly, on to the turnover ratio, the company continues to demonstrate efficient management of its working capital and fixed assets, as both the turnover ratios have further improved from the earlier 2 years despite the market headwinds. With this, we come to the conclusion of our quarterly earnings presentation, and I'll now hand the proceedings back to the Nomura team.
Hi, Juliet. Can we start the Q&A, please? Yeah. Okay. Ladies and gentlemen, you can either type in the question in the Q&A box.
Thank you. Yeah.
Or
I'm here. Thank you, everyone. We will now open the floor for the Q&A session. If you wish to raise a question, please use the raise hand function located at the bottom right of the WebEx page. We will unmute your line and prompt you to speak. Or you may submit your questions via Q&A chat box addressing to all panelists. Please be reminded to keep your questions to a maximum of 2 questions. If you have more questions, please return to queue. Thank you. The first question is from Deepak Yadav. Your line is unmuted, Deepak. Can you please go ahead?
Hello, can you hear me?
Yes, Deepak.
Yes, we can.
So, hi, sir. My question is from Mr. Vikram. So, I saw your interview with Bloomberg, where you rightly mentioned that after a while, being an EV auto ancillary will not be enough. This would be rather communal. So, how you look into the future with respect to innovation? Like, do you want to really go into connected vehicle space, autonomous vehicle space, or supplying automotive software, etc.? And would you think of acquisitions for the same? Second question is, I believe two-wheeler EV adoption will be faster than four-wheeler. So how you are planning this opportunity? What are your plans here? Thank you.
So thank you, Deepak. Good question, and thank you for watching me. So two parts. The second one, I think we can address first. Pratik, we do have in our appendix a slide which shows our strategy on electrification. So Pratik, if you could just go to, yes. Now, Deepak, to your question, if you look at our slide, we had always kind of positioned ourselves that in India, it is the two-wheeler, three-wheeler market that is going to be electrified first, perhaps followed by the bus segment, but we want to play in the two-wheeler, three-wheeler space, and that's where our first generation of PMSM, BLDC motors, etc. Then we're trying to make use of this opportunity. However, I tried to also mention that even in the motor business, because our technology, now the same technology can be applied to different use cases if you actually own that technology and can find different applications. So when we were doing the research on BSG, which is more of a torque assist to provide for a hybrid vehicle, the same research got us to that point that we could come to that, the active suspension motor. That is exactly what our roadmap tries to depict when we say that we are going into autonomous and connected. And I think there is this perception that an autonomous vehicle does not mean that it is a robo-taxi with driving itself with no human. It is a journey. It is a journey that may take 15 years to get there, may take 20, may take 10. But the thing is, while it happens, all the components and systems will continue to get smarter. And by smarter, I mean it will have intelligence, which is decision making ability, which will be done heuristically, and hence an algorithm would be required, and it will require memory. So the question is not that whether will we get into software. We are in software. Like this, the IMCM that we are making has 2 million lines of code. I don't think there is a choice. I don't think any hardware player worth their salt in the next 10 years can avoid having software. And how many lines of code per gram of metal will become important? I mean, the modern car today has about 100 million lines of code in it. So it is already happening, and we have to move in that direction. We have added that dimension to our roadmap, and we will continue to progress on it. I think we last time we spoke, we had about 29 software engineers. We are expanding that, and it will cross 50 by the end of this year. Acquisitions was also in your first question. So yes, definitely wherever we think there are capability gaps, we would acquire. We are not very JV focused usually. We are, like I said, we like to own and control our technology so that we can iterate, so that we can keep experimenting. We'll not get it right all the time, but keep experimenting, and then we will get to another use of something that already existed. So the R&D money that went towards, the development of the BSC, we haven't sold a BSG yet. We don't have a commercial order for a BSG yet. But we managed to, from that same research, add an entirely new revenue item into our P&L, which is which only happens if you truly understand and own your technology. And I think that is the kind of company that we will continue to be. Product roadmaps evolve. As you've seen in the last 9 months, we've changed our product roadmap this time around. Strategies evolve, acquisition, all of these things evolve. But your core identity, who you are as a company, that doesn't change. That endures. That is our value. We are an engineering company which focuses on R&D and innovation. I think that's something we will continue to be. I hope that answered your question, Deepak.
Exactly, and thanks for this explanation. This answers my question. Thank you.
The next question is from Nitin Arora. Nitin, your line is unmuted. Please go ahead.
Hi, sir. Good evening, and good evening to the team. So my first question on this very interesting new product which you showcased today, and so I just wanted to understand that how one should look at the potential of this product in other OEMs? You said, you have made this for one particular OEM. Uh, if you can throw some light, how fast this can eventually become more potential with the other OEMs, and you know, does that really add on a big cost to the vehicle, or it's more of a very game changer product, which will eventually get adopted? So that's my first question.
So, Nitin, very wise question, but you are wise. It is an expensive system. It is not an inexpensive solution, right? If you add, I think this was a question when someone had asked us about hub wheel motors. If you add 4 motors to each wheel, it is a very expensive solution to what is being answered today mechanically. However, like I said, the order of magnitude is just different. Like, because the chassis virtually remains stable while the wheels go up and down. Because what you're doing is doing the counteracting force. However, like I said, the cost is quite high. I mean, there are 4 of these in one vehicle. That itself is a big deal. And I think each one, how many times more of a starter motor would be one of these motors?
It will be around 4 to 5 times.
Yeah, 4 to 5 times. So it is expensive, Nitin. So our guess, this will be only for E and F segment vehicles for at least the next 5 to 10 years. It will be limited to E and F segment. E and F segment today, I think, would be around 3 million annual volume. So that's the total addressable universe. Will E and F segment as a proportion of the total passenger vehicle space expand? That I don't know. If that expands, the opportunity expands. However, over time, a fact that we should know about automotive industry and technology in general, right? Everything starts out being a very expensive and targeted towards the luxury or upper middle class segment. However, it does come down over time. When ACs were launched in cars in India for the first time, it was seen as for the upper segment. However, over time, it becomes something that is ubiquitous in every vehicle. But yeah, it will take time. For the next 5 to 10 years, I think E and F segment is where it is. After that, maybe it can go to the D segment.
Got it. And so my second question related to your views on the passenger vehicle, especially the electric penetration in India. Uh, as you said, the first direction you have, which was laid out earlier as well. But any progress for us in the DA part, in the motors part for the passenger vehicles, and your views in terms of penetration in India in the passenger side? Uh, and just one more part, as you stated in the earlier opening remarks, stating about the gradual improvement in chips. Uh, you think when you say gradual, one should assume a quarter by quarter run rate increasing? That's what you were about to say about gradual, or is it like that? Let's look at beyond second half of FY23. That's where the right picture to look at it. Those were the two questions. Thank you very much, sir.
Okay, so Nitin, I'll answer the second one first. Till then, Prateek, just take this to the world map of the EV programs for the first part. So the second part, I mean, look, the chip shortage is a supply-demand mismatch, which was at its widest, I feel, in mid-November and December. The gap has started narrowing. Will it go to zero, right? Will it go to zero is when no automaker is forced to not sell a car or not make a car because there is a supply chain issue. I think that demand supply mismatch going to 0%, that's a few quarters away. That's a few quarters away. However, it will continue to narrow from here. For some people, some OEMs, it may come much earlier. It may come mid 2022. Some it will come end 2022, and some it will come mid 2023. That 0% point. So it will keep improving though. And I think you will see also that a lot of people have found some clever hacks to reduce the number of chips in the vehicle, especially in the A and B segment. So you will see those things also coming in. People, this is very rare, right? That you're sitting on an opportunity and you can't monetize. So everybody is out there trying to do their best. All I can say is the worst is behind us. It will keep improving. Full 0% supply demand mismatch when we again all go back to talking about demand issues, that's a while away. Second, in India, to answer your question, Nitin, if anything in electrification happens, at least on the driveline side, we will be a part of it. In motors, as you know, in passenger vehicle, we don't have a product yet for traction.
Yeah.
So that we continue to work on. When we do have it, we will update you. But if there is a PV opportunity, or let's say number of electric vehicles sold in India in passenger vehicle, what is our market share in differential gears in India? That much we should be able to get in the electrified part of it also.
This is
But it's still small. The value-wise, that opportunity is still small.
I'll come back in the queue, sir. Thank you so much for answering.
Thank you, Nitin.
The next question is from Gunjan Pritiani. Gunjan, your line is unmuted. You can go ahead, please.
Yeah, hi. Thanks, team, for taking my questions. I had two questions. Firstly, on the BEV differential assembly, just trying to get a little bit more color on this. Can you share how many active customers, the ones in the serial production are there in the BEV differential assembly right now? And also, if you could share what is the market share, globally in the BEV diff assembly. I saw the market share shared for diff gear and starter motor, but I'm not sure if you shared this number.
Yeah, so I don't think we have it, but from what I remember, Prateek, what was it? 12.5% to 14% between that?
Yes.
How much? Which one? 12.5?
So it was 1 out of 8 vehicles.
Yeah, so Gunjan, 12.5%, but we don't actually actively track it. I'll tell you the reason. The denominator is changing far too quickly for us to know. Total number of vehicles is easy, but then you have to break it down to total number of vehicles, how many electrified, and then there is a third order thing, which is how many differentials per vehicle, which is the hard part because people don't give data by like how many cars we sold and how many cars were, four-wheel drive versus two-wheel drive. And that's when it becomes challenging to get market share of differential assemblies.
Mm-hmm.
And your first part of the question, again, we have to go back to the map. I'll just answer that.
While you're going to the map, the reason I asked this is I'm just trying to understand, given the opportunity size is growing so quickly, how should we think about the market share in this category and, this whole, opportunity in the compact vehicles, which you touched upon last time. How should we think about that? I'm just trying to get some sense, if I have to think about, next 2-3 years, there is going to be some normalization of market share, as the market is expanding so fast. So you maybe, just share some thoughts around this.
So I get your question, Gunjan, and I would say market share is not the way to look at it because in a very fast expanding market, it isn't really market share, but you should look at absolute revenue. And is that growing fast enough and are there new programs being added? And to be honest, very, very few that we are not in either gear or differential assembly, both. The point for us, at least, the strategy is, I know to the outside world, it may be that oh, let's take one product, differential assembly, how much market share, try to figure that out, then gear. It is in every electric car out there. We need to be either differential assembly, preferably, but if not, through other guys who are our competitors in differential assemblies, try to get in the gears. That's our approach right now. It's maximized to the extent possible, and which is why. So you see the North America, we have 4 customers and 8 programs. 3 are in serial production, means these have peaked already. So these programs, the production rate is not going to increase. The 5 that are there, which says in order book, means some of them have not started and some of them have started but have not reached peak potential. That's what it means. How many are active? I can't tell top of my mind. Prateek, would you know how many of these are like have begun production?
So total that would be, I think, 6.
Yeah. So, Gunjan, that's what I'm saying, because something that begins, let's say, this quarter will not ramp up to full production in at least for a year. So that will continue to, that's why we made it light blue instead of white. That circle, we thought it would give some clarity. Even we have doubts on this one, that how do we represent it? In Europe also, we have 2 unique customers for the DA, and this is just DA, not gear. In Asia again, so the opportunity will continue to increase. I don't think we should be very fast about the market share. As an analyst who tracks performance, I think, and even us internally as management, we track, is the revenue growing fast enough? And are we increasing the number of total programs? Because very hard to right now bet on who will win 5 years out and which programs will win, which customers will win. That's a hard thing. So right now our strategy is to get in almost as many as possible.
Okay, got it. The second question is for Rohit. Rohit, you showed the margin hit because of that denominator effect. But I mean, keeping all that aside, I'm just there has been a mix improvement with BEVs increasing. Is there a huge decline that we have seen in the starter motor business, because that's where the hit is coming from? So is it just because of the commodity inflation, or it is also because we're trying to expand our market share, so we are going into newer geographies? So more sustainably, how should we think about margins?
So I think our guidance on the margins remains within the margin range that we've stated, which is 26 to 28%. So as you know, we do not actually separately talk about individual business volumes or numbers, etc. So we actually don't do that dissection. But I mean, maybe partially answering your question. So if you look at the margin impact of positive impact of product mix, so this 2% is net of everything. So it includes, if there is any adverse impact on an inferior product mix sort of going up, and on the other side some positive gain. So this 2% is the net impact of that. So on the whole, the product mix, I mean, it's not only the BEV part. BEV, of course, is contributing, but even otherwise also product mix has changed for better during the quarter.
Okay, got it. I'll join back with you. Thank you.
Yeah, but Gunjan, fair question. I think what we can say at this stage is it should remain between that 26 to 28, 14 to 16. 14 to 16 PAT, 26 to 28 EBITDA. We have managed within this range for the last 5 years. And we don't see it, we don't see much risk in the near term. I mean, as I was reading one of your notes, you also expect commodity prices to soften, so it should ease from here on. But time will tell where commodities go.
Okay, got it. Thank you so much.
The next question is from Mr. Chirag Shah. Chirag, your line is unmuted. Please go ahead.
Thank you for the opportunity. Two questions. Question one, the new product that we have showcased. So this 405 odd crore revenue that we're indicating, this represents what kind of volume? And the related one is, why the SOP is so back-ended? I mean, is it a completely new line that is coming, a new model that is getting launched, or is it tied to that?
Yes.
Or can you explain that why it is so back-ended from 25?
100%, sir. Whatever you say, we'll explain, but we can't give price away, right? Because, I mean, you have to understand this is a public thing, and our competitors are also going to look at this transcript and say, oh, these guys price this much, let me price $5 below. So obviously, if I give you volume, I've given you value, you'll get to price, right? So that'll be shooting myself in the foot, and all of you who are investors in the foot too. So that we can't do. And 25, I think that's fairly, that's how automotive is. If you get a new order, most from getting the order to SOP is a 18 to 24 month cycle for any new program, right? And yes, it is a new, it's a new model. Because see, we are only making the IMCM, the motor software and controller part of it. But the whole system has to be changed, means pura suspension, the chassis, everything has to be reworked. The vehicle onboard controller, the vehicle computer. So the system is far more sophisticated than the part we are making. We are making one part of it, which to us is quite sophisticated, but the overall thing is very, very smart. I mean, imagine this thing is predicting that because it looked at the map and it knows that there is a pothole and it automatically adjusts your chassis so that you will never feel that. Why is it more important as vehicles become more autonomous is when a human driver swerves to avoid a pothole, you excuse the driver. But if a robo taxi or an automatic autonomous vehicle does that, you would think something wrong with the vehicle. So as things become more autonomous, a lot more systems have to become smarter. And it's a journey, right? You've seen that. Earlier in vehicles, a lot of functions were done by the human being. If you needed to move your window up, your hands' energy, you used to crank that thing. I mean, starter motors ke pehle, you used to actually crank the engine to start it. So it took human potential and kinetic energy to actually function. Slowly that got given to mechanical, then later hydraulic, and then later electro-hydraulic and electromechanical parts. I think we are moving when it is smart electronics hardware parts, where the decision to move also is being taken by the machine or the system itself. And this is a journey that's been continuing for the last 30 years and will continue going up. Why we say it's an opportunity is because we feel that these kind of disruptions suddenly take away the legacy advantage. If you've been making suspension systems for 50 years, you're not disrupted. Suddenly this new thing comes, somebody from outside that field is also capable of doing it, which is why I think there is great opportunity for people who can move quickly, and hopefully we will be able to keep doing these new products and keep innovating so that we are not constrained by the how much market share of which product type questions, and we can start delivering our own journey.
This is helpful. And sir, who would be your competitors in this? Are there any competitors in this kind of product?
Not that we know of. So active suspension systems have been around. A lot of, if you go on Wikipedia, you will see that a lot of people, a lot of OEMs have tried to do it. Mostly it's in-house OEMs. If you want, our competition will be OEMs themselves, that they also do some version of it. But we are a supplier of that system. So I don't know. Sat, you want to add here something?
Vivek, it will be very difficult right now to say who will be the competitor. But yeah, definitely I mean, OEMs were doing this for some of their high-end applications, but I think it's very difficult to, at this point of time, to say who the competition is.
So Chirag, I mean, obviously, so for Sat and his team and who they've developed this, it is a matter of very good pride. I know, I mean, take the commerce part of it out and take what impact it has on other things, material things, but a company from India is making a product that we are now discussing, is there competition or not? That itself is a fairly big thing for an engineering company, that we are doing something so new that we don't really have competition. There isn't really that big a market also because it is brand new as a system. But these things will increase over time.
No, sir, it's a great achievement, no doubt about it. The fact that you are launching this kind of a product itself is a great achievement. No way. Sir, second question was on the DHG motor. You had indicated that there are vehicle level trials underway. Any update on that side, and when can we see some traction on that? Because that itself will be a reasonably big opportunity for us.
True. So, I mean, although how much we had budgeted from it for the next year, we've already got through this. So anything that comes will be great. But no positive news so far to actually report. As you know, we like to keep things to ourselves unless it is definite and it is a purchase order. So no point, counting chickens before they hatch. When we get it, we will report. You know that.
It's a last question, if I can squeeze it for Rohit. Well, EBITDA margins are not necessarily the right way of looking the business given through. So, as an analyst, what is the number that we should look at? So, you rightly pointed that EBITDA margins, given the numerator impact, can keep on fluctuating based on how commodities behave. So, internally, what do you monitor, and what is the number or the parameter that we should monitor?
Look, the numbers we monitor are EBITDA and PAT only. I mean, from the profitability standpoint, of course, there are multiple other parameters, but if as an analyst you are looking at it, I think EBITDA basically is the core business profitability, and how we are deploying capital will kind of flow down up till the PAT level. So these are the two key indicators we also track. And we feel EBITDA margin is important because, like I pointed out, seasonally the revenue will go up and down. But since we are quite committed to, reasonably high return on capital and equity, so that is something which is for us a key focus area.
So, Chirag, I'll answer it in a different way. EBITDA is the right metric. Although just personally, I think EBIT is a better metric for manufacturing companies, especially which are fast growing. You shouldn't let depreciation affect that, because if it is going towards growth capex. However, let's stick to that. I think a better answer is that if you look at it from a slightly longer time frame, if you look at this business from a 3-year lens and see the EBITDA as a range rather than a every quarter what it is, because commodity prices do have a large numerator denominator effect. I think that would be the better way, which is why if you noticed every time we are asked, we always say 26 to 28. We don't actually talk about a point, because we do understand that it goes up and down without much actually changing because of just the mathematical impact of it. And look, in auto, like you asked me, why is it taking 2 years? This is how it is. It isn't a very quarter-on-quarter tracking business, because no programs are also short-term. Once you win a business, it is going to be there for 6 to 7 years, and in driveline case, 10 to 15 years. So it is a more, like I said, but we are new to capital markets, so we won't try to say more than it is. YTD is usually a much better way to look at businesses than every quarter, because there is also, you saw that chart, there is huge seasonality. If you are focused towards US and Europe, December has the Christmas holidays, and it will have that that impact. In Europe, August has holidays, so European market will have that impact. So these are things that are there and that are part of the industry cycle. It is a cyclical industry. But yeah, I mean, over a 3-year time, the range should hold. If that is getting depleted, then it's something that's changing in the structure of the business. And that's something to watch out for.
The next question is from Priya Ranjan. Priya, your line is unmuted. Kindly go ahead.
Hello. Hello.
Hi, Priya Ranjan.
Actually, I have typed in. Actually, I was traveling, so I thought the questions would be in the question box.
Okay.
Am I audible? Am I audible?
Read it out.
Yeah.
Okay. The question is, can you visualize the share of two-wheelers and three-wheelers in the overall business after 2 to 3 years based on current order book and assumption of electrification? Acquisition of new product is for totally new customer or new program for existing customer?
Sorry, that's many questions. Okay, let's just keep taking it one by one. What is the first part? Can you visualize what would be the market share in electric two-wheeler space?
Yeah, in the overall business, after 2 to 3 years, what would be the share of two-wheelers and three-wheelers? And whatever is your assumption of electrification basis that.
Rohit, would you like to take that? So in our revenue, what percentage of our revenue is electric two-wheeler, three-wheeler in, let's say, FY24?
24, I think it was 5% is what we had taken.
Yeah. नहीं उससे ज़्यादा होगा. I mean, if you take three-wheelers and two-wheelers and three-wheelers, so Kapil, or just two-wheelers?
Two-wheelers and three-wheelers.
I mean, we started off with, I think, 5% assumption, at least our internal thing.
I think you can give a broad range that will also help investors just get the direction.
Yeah, I think it'll be around 10%. That's the number broadly I'll go with, but Priyanjan, I'll reach out to you and answer this more specifically because I'll have to look at the math. Actually, see, this keeps changing because we just won 2 new programs this quarter on electric three-wheelers. Now I have to see how much they ramp up to in FY24 and then add that revenue to the projection that we already made. So it's quite dynamic. But 10%, I guess, should be a safe one. It should be slightly higher than that. Now, what is the second part, Kapil?
This is acquisition of new product. Is this for totally new customer or a new program for the existing customer?
Acquisition of new product?
I believe.
Hi, Vivek. Sorry. Can you hear me?
Yes, Priyanjan.
So the new, what I wanted to ask is whether this new program is, or the new product which you have asked is for the new program for a new customer or new program for an existing customer.
Oh, it's this new product, right? This active suspension motor. This is for a brand new customer.
Great, great.
Actually, yeah, this motor is pretty cool in that sense that we also added 3 new customers who weren't customers before. So it's pretty remarkable in just a 3-month period.
And the geography, if you can mention.
Well, that I mentioned that the 4 new programs, when we mentioned that chart, that one, okay, so I'll just repeat the 4 new programs that we have won. One is the differential assembly program for an existing customer in the European market. One new program, which is a e-axle program, that's for the Indian market, three-wheeler customer. A motor in a controller program, another L5 variety three-wheeler Indian customer. And the fourth is that motor program, which is for the European market, brand new customer. These were the four.
Great, great. Thanks, Vivek. That's all from me.
Thanks, Priyaranjan.
The next question is from Narottam Garg. Narottam, your line is unmuted. Now kindly go ahead.
Hi, Vivek.
Hi, Narottam. How are you, man?
I'm good. Thank you. And congratulations on, this integrated suspension order win. I think it's a big validation of, us moving into the technology leadership aspect. I just wanted to understand what kind of product complexity and in-car integration does this product involve? If you could, comment on this, and the complexity on, just supplying hardware-based products to now hardware plus software-based products. How does this change, your, profile as a tier one supplier? So just wanted to get a sense on these two.
Good question, and I'll let the person who's done this answer it and actually take the credit instead of me talking about it. Sat, over to you, sir.
Yeah, I think the product is a very, very technologically advanced product, and it encompasses mechanical, electrical, hardware, electronics, and software. And this comes with a lot of additional features. I mean, or the requirement. It has to be in AUTOSAR compliant. It has to be SLC and SLD in terms of the safety of the product. And it will, it will take a lot of our efforts and engineering resources and the knowledge to fully develop this product. And the response time for this motor to react is in milliseconds, because it's predicting the future and the bumps and potholes on the road, the uneven surface on the road, and reacting to it. And it has to integrate with the motor controllers. It has to integrate with the ECU and the master controller or inverter of the vehicle, along with the sensors in the car. So it's a very, very advanced system and the module, and its reaction time is, as I said, it's so fast. And the motor's durability has to be at the highest level during the operation. So it's a very, very sophisticated product. Hope I answered the questions here.
So to add to what Sat said, so there are two very challenging aspects to it. One is, of course, the software part of integrating all this and integrating with all the various other moving parts in the vehicle, including the sensors. And the second is the thermal management. Now that learning came to us because we did that hard work on the BSG system, etc. Because motors are notoriously get hot, especially if you move so much. So these are the two things that make it a complex engineering problem. And yeah, it is challenging and hence worth doing, and hence also commercially, profitable.
So that's great, Vivek. One more question which I wanted to get some sense on is, are you working on this product for other OEMs or other programs of the same OEM as well? And second, the huge addition on the software engineer side, if you could comment on, what kind of, I know you can't talk about specific projects, but broadly, if you could talk about, why is such a big addition of software engineers? Is it that you're moving towards more hardware plus software integration in the overall product profile? Some sense on that if you could share.
So yes, I think I did mention that by the time 2026 rolls around, and if you heard our IPO conversation, we said that 2030, it was our target to have the motor business give us more revenue from traction motors and other type of motors that go into electrified vehicles rather than the starter motors which are in IC. It is a deliberate business strategy to take away the IC phase out risk much faster than anybody else so that we're not caught short. We are reaching that goal in 2026. However, all of these new motors, if you look at this active suspension motor that we spoke about right now, traction motors, because they come with motor controllers again, all of them have a lot of software integration because the controller has a lot of functions that it has to tell the motor when to draw power from the battery, give it back to the battery. It has to manage the communication of the motor with the vehicle. It has to do the what Sat mentioned about AutoSAR, ASIL-C, ASIL-D, the functional safety elements. It has to monitor the health of it. Cybersecurity is a big one. So, because I mean, these are moving vehicles. If you can hack into them, you have actually made literal weapons which are in somebody else's power that can control them. I mean, 9/11 was two planes, right, which were physically overtaken. Here, sitting remote control, if you can control these vehicles and thousands of motors and you can use them to take them wherever you want, that's a big, big national security risk. So cybersecurity protocols to build into these motors become far more important. So as we move from, I would say, less intelligent parts to smarter parts, the kind of engineers and the kind of talent we would need keeps changing, which is why that big ramp up. I think we put out a job requirement for 50 new roles in the last quarter, and all of them are around that area. Cybersecurity, functional safety, hardware integration, testing, software. This is the new normal.
Oh, Vivek, thank you, and good luck going forward.
Thanks, Gautam.
The next question is from Vinayak Mota. Vinayak, your line is unmuted now. Kindly go ahead. Hi, Vinayak.
Yeah, I guess as we can't hear him. Let me read out the question. Where do you think the two-wheeler segment should move towards? It has currently moved from 0.1% to 1%. Just want an understanding on the future aspect of the same.
So we take two-wheeler, three-wheeler as a category. It should become about 10% of our revenue in FY24. The same answer I gave to Priranjan. Beyond that, we can't really say. It may be a little less if electrification is slower than anticipated. However, looking at policy and government intent, it doesn't look like it will be slower. It may be faster.
Sure. Juliet, we can move on to the next one.
The next question is from Anup Gulanika. Anup, your line is unmuted now. Kindly go ahead.
Hi, sir. The order book which was displayed in the beginning of the slide showed that the order book is 176 billion. Can I just get an understanding over what period which the revenue will be recognized?
Sure. Sorry, I didn't do that preamble this time because this was the third quarter. So we do first two quarters, we explained exactly how it is. So I'll just read out. It is in the note below. The net order book is basically the aggregate revenue from, I'm actually reading, so from awarded programs, which are either yet to start production or yet to fully ramp up in the next 10 years. After, and this is why we call it net order book, after adjusting the negative value of all programs that are reaching end of life or being phased out. And then we also apply a reasonable, I would say, discount, because if you add up all the orders from customers as they should be, are all very optimistic. So you have to apply your reasonableness in kind of calculating what it should be.
Okay. Thank you so much, sir. I actually didn't need read the note below. Thank you for your explanation.
No, it's not your thing to read. I just thought that, we said this twice, so I didn't want to say it again.
Thank you so much, sir. That's it from my side.
It was our miss, not yours.
Juliet, can we take the next one? Okay, let me read out a few from the Q&A box. Okay. Do you see supply chain related issues due to container availability?
Yes, is the short answer. Long answer is, but we are managing. I mean, all of this is despite all this. Freight rates are 2 to 3 times what they used to be, but we are managing. And that is literally the job of management. These things will happen. There will be headwinds, and we have to see how much we can do despite all of these difficulties. And there will not be a time in which there are no difficulties at all. So something or the other will always happen. But yeah, it's an ongoing issue. However, the biggest issue continues to be the issue of lower sales because of our customers' supply chain issues that the semiconductor chip.
Okay, we have another one from Pragya Shah. Any update for magnetless motors?
Yes, I'll ask Mr. Deshmukh to elaborate. But before that, yeah, we have tried 4 ways already of making magnetless motors, and we have failed in those 4. So now we know 4 ways that it won't work. One way it worked, it gave the required output, but it was too big and heavy. In one way, the efficiency wasn't good enough. One way, the torque wasn't good enough. So yeah, we are continuing to try. Mr. Deshmukh, you want to add something, sir?
We have sort of, this is a journey, and like any R&D project, you have to do experimentation, and you have to try many things, and something works, something doesn't work. So there is a learning. So there is a progress that is happening, and we are now building some proof of concept prototypes, and they will be tested. And if we succeed, then probably next call, we will be maybe in a position to say something about it. There is a progress happening, and the progress, of course, is because there are many options and there are many technological challenges, and you have to overcome one after another.
Okay, we have another one from Mohit. Can you comment on the capex plans and how they are going on? What is the capacity utilization?
Rohit?
Yeah, sure. So capex, we had given an update last time. We actually had revised our estimated capex number for this year down from 650 to 450 crores. So right now, that's where we are. We feel that our final capex for the year will be ballpark in that range. And in terms of capacity utilization, so for our driveline business, if I look at on the gear side, our capacity utilization would be about 80%. Differential assembly capacity utilization will be actually 100% plus. And on the motor business side, I think the capacity utilization is about for 50% for the last quarter.
Okay. Thanks. This question is from
one request. We will today, there is no time limit. Let's take every single question that is there. Because I do get requests from people afterwards that they weren't called out. So let's have everyone. I mean, it's important. Look, when you have a quarter in which you have like very, very good financial growth, etc., maybe you don't need to answer so many questions. But when it's been a flat quarter like this one has, I think we owe it to people to answer every single question that we can. So we'll be here till every question is answered.
Sure. Next question is from Jinesh. On your expanded technology roadmap, can you elaborate on timelines for getting into autonomous connected vehicle components? Which components are you targeting for this new segment?
Sure. So this active suspension one is in a way an autonomous product, because what does autonomous mean? Again, like I said, it's not the end goal of a robotaxi. It is what does it take for a vehicle to become autonomous. First level is hands and feet removal. The second is eye. The third is the brain. Right. That's you're taking the human being out of the equation. So we are already on it. Next, as we had put, there are bots which are also for wider applications which we may look at. Like I said, mobility definition does not have to be constrained to automotive, and within automotive, not only a car, anything that moves, a device that moves people or goods from point A to point B for us is mobility. And motors that can go in, or gears or gearboxes that can go into these components and make them more intelligent, all of them are open. It isn't a definite, defined roadmap. We are evolving as a company. We are evolving our roadmap, and it will continue to change. Innovation cannot be held to a standard and said, here is a map, and let's make this. It often happens by serendipity, like this one. We were out to make the VSG system and ended up making an application that we hadn't actually thought of when we went towards it. So it will change. Yes, the intent, like I said, is there. And as vehicles become more autonomous and connected, we will seek our opportunities in that area. And as we identify specific products, we will keep adding to that. That's why we left so much white space on that product roadmap, is so that we can fill it. And when we do, as we said to you, everyone, and we always keep repeating, we will transparently share with you as it's evolving our successes as well as our failures. So we're not going to hide anything.
Sure. Next question is from Anka Mittal. Good evening, everyone. My question is regarding new program win having peak value of 405 crores. When will this project start contributing to top line?
SOP is FY25. So yeah, then I think it's written on that slide, but FY25, it won't reach peak in FY25. Peak should be FY26, but it'll start contributing in FY25.
Okay. This question is from Anirban. Is the company looking to acquire any foreign players in overlapping segments to cater to European players, or looking to bundle products from other manufacturers and export composites rather than individual components so that some premium can be charged?
That's a very specific strategy suggestion instead of a question. But Anirban, thank you for that. I mean, look, acquisitions, unless they are done, they are not done, right? So it is very binary. We can have all the intent in the world. We can target a few companies, but only when is it completed, signed, then it will be, it is worth sharing also. So intent alone cannot solve transactions. So we will share when it is relevant and ready to be shared.
Okay. This question is from Karan. Tesla often mentions that software revenue typically is a higher margin in nature and has potential to significantly enhance overall margin profile as it scales up. Will our supply of software solutions for autonomous vehicles materially enhance our margin profile ahead?
So look, in general, let's just take it generally. Anything that is replicable infinite number of times is always going to be more profitable. So when we say that every IMCM has 2 million lines of code, what you have to remember is I don't have to write this 2 million lines of code again. It is written once, and now if we have only one motor module sold, that's hard luck to us and we'll probably never recover money. But after a while, every other iteration of a product sold is at no additional cost. Yes, we will continue to have to update those systems, keep adding it, keep making it more elegant. But that is the inherent beauty or power of technology or software. It compounds over time as the cost gets distributed per unit sold and the profit margin keeps increasing. That is the power of anything that has software driving it. Actually, that is the power of anything that has technology driving it. When you acquire technology for the first time, like we did with, let's say, precision forging, it takes a lot of effort and our margins kept improving because that same technology is being applied over time, and over each iteration, your initial cost gets amortized. So it is the nature of it, and of course, software has the most applicability. So yeah, that's in general the question. It doesn't matter if we do it or who does it.
Okay, this question is from Arun. What is the accuracy of 1.7 billion order book for 10 years? For example, in the last 3 quarters, is it on track with the projections?
So in normal times, I would have said it is within plus minus. Like I said, we've already baked in some conservative estimates to ensure that it is always online. It's just that last 2 years in the automotive world have been, well, I think in any industry, have been so up and down that things are more dynamic and the standard deviation of error are far larger than they used to be. But yeah, plus minus 5% on a 10-year basis, because the thing that affects these kind of things is usually delays in program, but delays in program do not last, like you can, if you try to make it very specific to a year or a quarter, programs often get delayed in their launches, but not in a 10-year time frame. So it makes the degree of error far less.
Okay, let's go back and take some of the questions from the question queue. Siddharth, can you take a few questions?
Yeah, let's take from Naresh Suthar. Naresh, your line is unmuted. You can ask the question.
Yeah, thank you for taking my question. Partly it has been answered. So it is regarding the future product slide which you are sharing. Can you share how many of these future products have already crossed the R&D hurdle and are nearing the commercialization? Will be helpful. So some of them you have already mentioned, like magnetless and others. So
yeah, no. So magnetless would also still be R&D only. So Mr. Deshmukh, you can explain the slide. Prateek, you can put that slide on. See, if it is in white, it is not in commercial production yet.
No, I'm saying it might. Okay, it's the R&D stage is still not over. That's what.
Yes, they are all in R&D.
Whatever is in white is in R&D currently.
Yeah.
Once it gets commercialized, it will come into the blue.
Understood. And of the products which we already have commercialized in the blue, in let us say, how many programs are in discussion, like a future potential funnel, if you want to understand?
So all of them have many future programs as well. Even actually, forget the blue, even the black ones, they continue to have.
What I meant was like this quarter we have won 4 programs. So likewise, you must be having active discussion with your many customers. So any funnel number you want to give?
No. Okay. Because see, this is the thing I mentioned the last quarter. These things happen over a period of time. Like we won for this quarter, but it isn't that we started the conversation this quarter. Most of these conversations have been happening for a year or more. They just concluded this quarter. So there is a lot of conversations. I mean, that number would be lots, like in dozens and dozens of conversations going on. When they end, it also may be that there is a quarter where nothing happens. You have nothing that you conclude and no new wins. That can also happen. So they get bunched up sometimes. I think last quarter itself in Q2, what happened was we had very few new wins in the last quarter. This one, we were fortunate that many programs concluded. So that will happen. I think it's more prudent to look at it on a year basis. Because these conversations, all of them, like I keep saying, are 12 to 18 month conversations to conclude.
Okay, thank you.
Okay, the next question is from Hitesh Goel of CLSA. Hitesh, please go ahead.
Hi Vivek, hi Rohit. Good evening.
Hi Hitesh, how are you?
I'm good. So my questions are basically just wanted to understand from you. You know, globally we are seeing mechanical parts getting shifted to electric parts, right? Especially in EVs. I know you are already thinking about it, but just wanted to get a sense that if the driveline business actually shifts to a motor business, which is not something we are seeing across the board right now. Very few, one or two OEMs globally have started doing that. But what is the cost economics here? How do you think about it, and how are you preparing organizations for that?
So I think I answered this question in another way when I think Nitin was asking me what is the potential of the active suspension motors. Same thing. So to replace mechanical parts with electrical and electronic parts, let's say you take the hub wheel motor or a quad motor thing and put that concept and take away the two differentials. Your cost goes up by 4 to 5 times per vehicle. It does enhance torque delivery because you've given 4 independent torque delivery points. However, the cost is very high for anyone except a E or F segment player to do it. So it is limited to that, which is the same thing. So this has a counterpoint to it that if we make such a product, our opportunity is also limited by that same thing. So our risk and opportunity are both, I think, in that. Over time, I also did add that maybe in 20, 25 years, it will change significantly if people find ways. Because what are you doing? You're taking 2 differential assemblies, which is essentially a set of gears, and replacing them with 4 independent motors, which are all smart. That's an expensive, fairly expensive solution, to be honest.
Okay.
For a game that will not be relevant for many vehicles. It is relevant for, let's say, highly torque hungry SUVs, which have to do off-roading, etc. Similar to जैसे how much is the EDL market? Like even in this, by the way, there is a step, that's the extreme step, right? They replace mechanical completely and put electronics. There is a mid path, which is the electronic differential lock or the EDL, which is kind of an electromechanical part. So we are on that we are migrating to that ourselves.
Yeah, my impression was also that. I just wanted your thoughts on it. My second question is actually that one of your big customers in BEV is actually on a con call in the recent earnings con call has alluded to the fact that they are also now seeing chip shortage becoming an issue, which they actually did very well in CY21, right? They were the only guys who grew significantly where other guys declined, right? But they have also talked about delaying some of their launches because of chip shortage issue and maybe scaling up production to not to the extent which market is expecting. So have you did you are you also seeing some impact of that going forward in your business, or you are on track on what you have guided in the past, say for FY24, FY25 kind of numbers?
So Hitesh, we won't take customer specific questions, and it is their strategy and their problem, and they will guide the market as they do. But in general, I can answer that this chip shortage thing is not something that affects one person, it's affecting everyone. We have various estimates from all the customers we talk to. Some people are getting out of it as early as Q3 of this calendar year, and some are going to take till Q2 of next calendar year. So it's a spectrum, but for everyone, this is a problem. I don't think there is anyone I know who's completely untouched by this.
Great, great. Congratulations, all the best for the new order. Yeah.
Thank you, Desh. Thank you.
We'll take the next question from Mahesh Bendre of IDBI. Mahesh, you can go ahead. Mahesh, you are not audible.
Hi, Mahesh. Yeah.
Let me read out. He has put in Q&A box as well.
Yeah.
When will 4 European customers with whom we have received orders start contributing to our sales?
Sorry?
When will the 4 European customers from whom we have received orders start contributing to our sales?
So one of them, just go back to that chart again. Actually, these are very, very specific questions. I don't think we also, yeah, 3, right? Okay, so I like 1 extra has been added. They are, 1 is already active but not ramped up, and 2 are yet to start production. 1 is well known, we said FY25 for the active suspension one, and the other one will happen, I guess, in Prateek, is it FY23 or FY24?
That could be FY24.
FY24. So 1 active, ramping up, 1 FY24 and 1 FY25.
We can take the next question from Nilesh Shah. Nilesh, your line is unmuted.
Great, thank you. Just need your help in understanding the revenue cuts, right? So one thing that I am seeing is that the QoQ growth in North America is fairly high, about 61 odd percent, right? But we don't see a commensurate QoQ growth, say, in your potential, like in your, on the gears and assembly side. So just having a bit of trouble in reconciling this, if you could help with that.
So Nilesh, to be completely transparent, I don't think we look at these data cuts Q on Q. Our business is not very quarter oriented.
Okay.
Because if you think about it, all programs are running. And now, let's say you have 1 customer, which you have and the geographies also for that matter. 1 customer, 1 program, that is the same platform used in every market globally. In some quarter, like that customer says, you know what, I have enough inventory in this market, why don't you supply everything to the other market? We'll do that. And these mixes will change. The point is, when you have, I mean, you're seeing our answers in everything when people are saying, oh, you have won this, when will it start? It takes 2 years to start, it takes 2 years to win. But when it comes, it also stays for 10 years. So not much changes. The things we have to watch out for are, first order problem, are vehicles being sold in the world or not? That affects everyone and that includes us. Second is, are customers' vehicles being sold or not? And the third, which is more of a motor business issue, which is the third level of abstraction, which is, are the platforms or models uh, that I supply to within that customer, are they being sold more or less? And it keeps changing from week to week. And right now, because supply is a constraint, what many OEMs are doing is they are prioritizing certain models which have more profit per unit. See, for an OEM, it is how much revenue did I produce this quarter? Let's say you have only 100 chips. The demand is for 200 vehicles. What you'll do is you'll make 100 units which have maximum per unit profit. Now, because you've done that, you choose models. You don't make all 200. For a component guy, the volume matters and which model you're on. So if you're not on that model that is being prioritized by the OEM, for that quarter, you'd be left out. But my request is, I don't think there is uh, much inference or insight to be gained on quarter market shift or customer shift, because a lot of it is also, we do for clarity and transparency try to put programs by geography. A lot of them are becoming global programs. So you supply to multiple locations from the same part, same program, and then customer decides that do they want those delivered in that geography or for that end market or not.
Yeah, I mean, I see what you're saying, but my question was that in one of your large geographies, right, where you basically sell 3 product lines, right? You sell
Prateek, can you go back
differential.
1 second, Nilesh? Prateek, can you go back to that slide? See, all geographies are pretty much equal. Number one, I don't think there is no, Prateek, this is not the slide. He's talking about diversification slide and Q on Q growth. Yeah, right. So North America, India, Asia, Europe, they're pretty much all equal. It's
Yeah. So I'm not questioning that. I'm just see the point that I am trying to kind of just understand better from you is that in Q1 and Q2 you did about 140 crores in in that geography that has suddenly gone up to 220, right? I mean, so it's not to kind of pinpoint which customer and all. I'm just trying to understand, has something changed in terms of something new ramping up, right? Or you you made a point about some OEM choosing to produce more in North America versus Europe, right? So just trying to make sense of this ramp up, Q1 Q2 versus Q3.
Nilesh, I think it's more a question of what has reduced rather than what has increased. So actually, this is a relative thing, right? Because this is common size to 100 because it's a percentage. I don't think there is anything that has increased a lot in North America. I think other markets have shrunk much more. Hence, that looks like it has increased more. I don't know the absolute
No, I
number.
did the math. I mean, I converted these percentages. Anyways, I see your I take this broader message from you to not scrutinize these quarterly. But if I still fail to understand something, I will reconnect.
No, please come back and actually let me ask Rohit to help you out here, because I personally haven't looked at this cut, because any analysis that doesn't yield specific actions to us is not very meaningful to us as management team.
Right.
I haven't done that. But Rohit, do you know? Actually, don't even remember what it was at the end of Q2, which is why I'm also at a loss.
About 140 crore was the North America revenue for Q2. Anyways, I will, I will, reconnect if I need any further clarity.
And Rohit, I think he's not here.
Yeah, sorry. No, what I was saying was actually, I think it's the answer that you gave. I also don't have the data which he's looking at, but my sense is It is because of the redistribution of the supply chain by some customer.
Okay, thank you.
The next question is from Sunil Bojwani. Sunil, your line is unmuted. Please go ahead.
Hi, Vivek. It's an absolute delight to always hear you on your con calls.
Thank you so much.
Okay. I have a question regarding the recall. So, if any of the OEMs have their vehicle recalls due to a faulty product or faulty equipment of ours, so what exactly happens in that case? Who bears the cost? And has it ever happened in the past?
So, scary question. Has not happened in my tenure. Mr. Deshmukh has been in this industry for 40 years, so I'd ask him to answer because I don't have any knowledge or experience.
Well, it has never happened in Sona BLW, and so, but if there is a recall on account of our product being defective, obviously we will have to bear the expenses. It will depend upon the particular contract with the customer. But in past so many years, we never had any such problem.
Okay, that's good news. So basically, it's contract specific.
Yeah, and I don't have anyone on legal on the call, but I think it is limited to the value or the sum total of value of parts supplied. So I think there is a limitation that we try to build in the contracts. Rohit, would you have any idea? Because we haven't seen this.
We've not have had any instance like this.
But from others, would Vikram, Sat, have you seen others in the industry? Because this would be same for everyone.
Well, personally, I have experienced long ago in Sona steering when there was a recall on account of a defective steering. And at that time, actually what happens, the practical issue here is it's very difficult to pinpoint who is to blame or where the actual problem lies, because ultimately the parts that we make go into a system and then it go into a larger system, which is the automobile. And very often who is responsible? It is the product, or it is the assembly of the product on the vehicle, or it is interaction with another system. So it is a complex matter. So therefore, it is very difficult to answer this question. But in short, I think it is the agreement with the customer which dictates these things.
Okay, that helps. And my second question is a follow-up to the active suspension product. How is it different than the adaptive suspension, and is it a more value-added kind of adaptive suspension? And I'm assuming that this one new product has added 3 new customers. So they must be the luxury car segments or the luxury vehicle segment. Am I correct in reading that?
So it is currently only one customer. The other programs that were added were for differential assembly, e-axle, and motor controller separately. There were 4 new programs, and one was for this. It is just one customer, and you're correct that the end vehicle is a luxury vehicle. But for the first part of it, Mr. Deshmukh, if you'd Mr. Deshmukh?
Yeah. Sorry, can you repeat? I couldn't get your question.
Yeah, I was asking that how is it different from the adaptive suspension, and is it an advanced level of adaptive suspension, this active suspension module that we have made, or
Yeah,
what
so
exactly? Can you throw a little light?
firstly, I think there are different kinds of systems for suspension, especially this is, of course, going into high-end vehicles. And so-called adaptive suspension is in existence for a long time, and there are different technologies being used. this is one particular type of technology which is using electric motors as a actuator. And added to that, because of the recent developments in data capturing, sensor technology, and also connected nature of the vehicle, there is some the algorithm of this system is such that it predicts how the wheels are, what wheels are going to come across, and takes action based on that. So it has to happen very quickly, like Sadar earlier said, in milliseconds. And it is also, the vehicle is connected with the cloud, from which, using the spatial information of that map of the road condition, if there is information about that, that's used into it. So it's very complex in that sense. So
Okay,
I
that
I
helps.
hope.
Yeah, that was helpful. Thank you. Thank you, Team Sona. Thank you for your
The next question is from Arun Kujatis. Arun, your line is unmuted now. Please go ahead. Hi, Arun. We are not able to hear Arun. We will go on to the next question from Nilesh Damanska. Nilesh, your line is unmuted now. Kindly go ahead.
Yeah, hi. Thanks for the opportunity. So, see, my question is pertaining to your starter motor business. So, I think I was just kind of referring to your previous quarter's PPT, in which I think you mentioned that the 9 month CYO 21 market share in starter motor was about 5%. And in the current PPT, current quarter's PPT, you're mentioning CYO 21, the market share is 4.6%. So it implies that Q4 there's been a sharp market share loss, so as to speak. So is this the right interpretation? And if there's a market share loss, then what is the reason for that?
Sure. So it is the right interpretation. The reason is that the markets we have larger market share in are, for starters, especially North America and Europe. So what has happened is global auto sales in this quarter dipped only 2-3% year on year, while the markets we have larger market shares in, they performed fairly poorly in relation. So, which is why it shrank. We haven't lost any customer or any order or anything. The markets we are dominant in, they didn't perform well.
Got it. So it's pertaining to the region-specific issues of your clients.
Yeah, but this, by the way, will continue to happen because often the problems that are inherent in one market, they need not be in other markets, especially in the last 2 years. Actually, this is a phenomenon that wasn't really around that much in the good old days of, prior to 2019. But now, like, I think this quarter, Asia, and in particular the China auto market, sales were actually drastically different from what was happening in Europe. Europe had a very bad quarter. So it's usually it was every market was up 1 or 2%, and so you needn't draw too many conclusions from these things. But now these things are very drastic.
Right. And just one more question, if I may. So I was just noticing that see, I was just seeing Tesla's the prominent US-based suppliers to who is one of your clients, I mean, their volume growth versus say your volume growth, your revenue growth from the BEV, okay, from the BEV revenues. So uh, generally, so this time around, there's again some bit of divergence. Any reason for that? In the sense, your revenues are slightly slower than the underlying volumes.
Look, we can't confirm or deny any customer association, and we do not answer customer-specific questions.
Yeah, maybe I'll take that offline. Thanks for that. All the best.
The next question is from Ajay Rangani. Ajay, your line is unmuted now. Kindly go ahead.
Well, I guess he's not there, but I can read out the question. Increase in input cost and supply side bottlenecks can put some pressure on bottom line and margins. Will clients accept cost pressure or some absorption will have to be factored in?
We already are. Our margins would be much higher, no? No, so I don't know. Is the question that will they get worse from here, input costs? I hope not. I don't think they are, but I hope not. And yes, there is a pass-through mechanism that is there for material prices, but not for everything, right? Freight costs, labor costs, these are things that you have to bear. But like I said, I think we've seen the worst of that. I don't think it should continue.
Okay. There is a question from Vipul. He wants to know the BEV revenue breakup in terms of DAs, traction motors, and e-axles.
We don't provide that breakup. Look, we love to be as transparent as possible and answer as many questions, but we can't really go into these variables. We ourselves don't do this analysis because it doesn't yield any actionable, specific, or insightful inference. I mean, beyond the point, analysis also has to have some usefulness. We don't do this, and I won't have this ready. But yeah, most of it would be DA. Let's just put it that way.
Okay, we can see some of the hands still raised. If you have forgotten to lower your hand, can you please do so? Or if you still have your question, can raise the hand. We have, I think, one last question from Gunjan Ziani. Gunjan, your line is unmuted. You can please go ahead.
Sorry, it's my bad. I think I didn't lower my hand. All my queries are answered. Thank you.
Thank you, Gunjan.
Okay. Thank you. Thank you.
Juliet, there's one more question in chat. Could you please take that?
Yeah. Okay, there is a question from Shyam. The motor business has seen sharp 33% QOQ decline. If I combine with Europe region sharply declining QOQ, is this due to some ICE models of customers declining sharply as EV models gain traction in Europe?
First of all, hi Shyam. Good question. I think it will be very relevant 1 year later, 2 years later. Right now, not so much. So this is more a customer/model level problem, and because this is a motor thing, Some of our customers, unfortunately, are more hit by the chip shortage than others. For some, the supply-demand mismatch is much higher. And some of our models are not highest profit per unit, and they have just been deprioritized. So that's the reason. The shift to IC has not yet started hitting starter motor sales overall. And 100% I can guarantee you this in automotive changes and such big trends don't happen in one quarter or the other quarter. The same starter business which was doing on average, let's say 100 crore plus every month will not go to 50 crore, 60 crore in a month due to a powertrain electrification shift. It would happen because of a very specific customer or model. So not really, but it is a trend we are watching and it is the direction it will go. But it will be much, much more gradual than this. And I think what happens, I think, is this is a natural reaction that we often, for these big changes, right, we often overestimate the near-term impact and underestimate the long-term impact. So electrification is real. By the time 2030 to 35, it will be almost absolute. But in the near term, the change will be far more gradual, and it is like that frog being boiled alive. One thing, it will happen in degrees. This sharpness has nothing to do with that issue.
Okay, we have next question from Vamshi. Vamshi, your line is unmuted. Kindly go ahead.
Yes, hi sir. I have a question on Q2 investor presentation. Is it viable to ask now?
Sure.
Hello?
Yes, what's the question? Sorry, I didn't get it.
Sir, I have a question on Q2 investor presentation. Is it viable to ask now, sir?
On Q2?
Yeah.
I won't readily remember, unfortunately, that would be the problem. But ask, I can try.
Okay, sir. Just a second. Yeah. Sir, as on end of Q1, the order book was 14,000 crore and the orders consumed were 1,600 crores. But the revenue recognized is just 585 crores. So where are the other revenues, sir?
So the impact has to be multiplied by 40, right? So this is a quarterly adjustment.
Okay, sir.
I'll try to explain. Let's say we were getting 100 rupees from a program. Okay. Next quarter, we were supposed to get, and we get 80, that is a minus 20. Now this minus 20 will be multiplied by 40 to take that program of that drop, right? That's how it is. So every quarter you have to do the math again. And this is why ramping up often gives you very good benefits because each incremental gain actually keeps translating into further gains. If it is indeed ramping up, they will hit a peak.
Okay.
I hope I did confuse you with
yes, sir. I'll have a go through it again. Thank you, sir. Thank you so much.
So it's a into 40 divide by 40 type of thing. Because it's a 10-year order book, there is a magnification.
Okay. Thank you, sir. Thank you so much. Yeah.
The next question is from Arun Kuryakar. Arun, your line is unmuted now. Kindly go ahead.
Hello. Hi. Am I audible now?
Yes, Arun. I can hear you.
Hi. Good job by all the team during this uncertain times. You have done a good job. I just want to ask something about the magnetless motors. The R&D, do we have a schedule for it, or like we try for this much period and then we come up with a result, or it's like no dead end? How is it?
Well, all are
be scheduled. I mean, this is not only us trying to solve it. Toyota has also been trying to solve it since 2018. A lot of people are on the same path. When you finally find the solution, that will be the deadline. But yeah, till then, it's a destination, and we are on it. We may never get there. Also, is a probability. Like it is an event that could happen. Sorry, sir, I interrupted you. Mr. Deshmukh?
No. You answered.
So we have a schedule. What is the schedule?
No,
Well,
I
there
said, sir, you can take it.
Well, there is a schedule. A project. Every R&D project also has a schedule. We started off with we have a tentative schedule of 18 months. So 6 months are over of those 18 months. So there is still 12 months to go. But it is quite flexible. It may happen before 12 months. It may happen after 6-7 months. It may take a few months more also. It's like it was said earlier in one of the earlier interactions, earlier answers, that every R&D project is like an experimentation, and there are different options available to you. You try several things and you learn from failures, and then you go ahead. So in the same, there are many iterations which need to be taken, and therefore you cannot rigidly say that it will happen in 18 months or 12 months. There is some tentative plan that we have, which I mentioned is about 18 months, but it could be from today, it could be another 6 months, or it could be another 12 or 18 months. Depends on, or like Vivek said, it may not result into what we are looking at. Because there are certain targets set in terms of, it has to be a magnetless motor, but it also has to be within certain boundaries, such as the cost and size and weight and so many other things. So to be able to achieve everything is a challenge. And if we do not, for example, ultimately we come out with a magnetless motor, which is much more expensive and is non-competitive, we may have to drop that. So therefore, it's very difficult to say when it will happen, but you can take another 12 months as a tentative schedule.
Thank you very much, and all the best for the R&D program.
Thanks. Any more questions, please? I don't see any raising hands right now.
Hi, everyone. In case there are any questions, please do raise your hand. Okay, Vivek, we don't have any further raised hands that I can see. Hopefully, we've tried to take as many as possible. I will now hand the floor back to you for remarks.
No, that was the intent. Thank you. Thank you, everyone, for making time on a evening and outside work hours to listen to us. And hopefully, we answered all your questions. Do reach out if you need to ask more. Thank you.